Hi everyone, welcome back to my channel Achieving Alpha and welcome back to another episode of Smart Money Analysis. And looking at the fall that we have observed in the past 2 weeks, everyone has a question that are we heading towards the start of a new bearish regime in the markets? So we would see that Nifty has fallen almost 1000 points from its high of 18600 and it made a low of almost 17600. So that's roughly a 5% fall within a span of 2 weeks. And the question that is bothering a lot of us is that is market ready for a crash or a correction? And if it falls, how much can it fall and what we can expect in the coming days? So let's try to answer some of these questions by looking at the charts and the data. So let's begin. Very firstly, we have the daily time frame chart of Nifty 50. You can see continuous red candles except for one green candle all the way from 18600 to 17600. And the market is very close to its 50-day exponential moving average where it should take up some support at least. But at the time the market is looking very weak. I will tell you why based on the data and the option chain. But as of now, things are really not looking good for the markets and every single bounce is being sold off. In fact, if I show you the daily time frame chart of Nifty 50, so in the last trading session on Friday, we opened up we opened up a slight gap down. So we closed at around 17,857 on 28th. 29th, that was the last trading day of the month. We opened somewhere around 17,833 and then you observe this particular candle. This first candle made a low of 17,610, almost 17,610, and from there we observed a recovery. But as I mentioned, that again we have witnessed a really good sell-off towards the end, and the closing is somewhere around 17,600. So this is what we can see in the markets. Again, Bank Nifty had a similar pattern, but this was clearly a bull trap. So a lot of people were expecting 50,000 in Bank Nifty. Like news channels and all would give you a target of 50,000 by December and whatnot. But one thing you need to understand is that markets cannot go up in one straight line. And that's what we have been observing for some time now. And again, you can see that really intense fall in Bank Nifty as well. So what should we do and what could be the further possibilities? So firstly, the fall hasn't even begun. It's just 5%. Can we expect more? That probably depends on this 50-day exponential moving average. If market takes support and if it again closes above 18,000, then we can say that this might be a temporary jerk. But if at all we close below 17,300 this time, we could be heading in for a 10 to 15% correction from the top. So expecting somewhere around the 100-day exponential moving average, that is 17,000, that would be the first target if we close below this 50-day exponential moving average for some time. Talking about the monthly time frame chart, monthly you will still see that we are at an RSI of almost 80, which is not good. But you can see that towards the end of the month, we have just closed slightly above the opening, which was there in this month. That was somewhere around 17,530. But still you can see that this is kind of an inverted hammer pattern. Although the candle is still green, but this clearly demonstrates the selling pressure that we have observed from a high of roughly about 18,600. So let me show you the activity from the FII and DII. Before that, let's first also have a look at Bank Nifty. So again, this is Bank Nifty. Again, you can see intense selling from a top of almost above 41,800. And this is not a very good scenario because this went up in one straight line thanks to the good results from ICICI Bank, but then it started falling as well. And again, this has closed below the 20-day EMA in the last trading session. And again, 50 EMA is an important support for Bank Nifty on a daily time frame as well. Talking about the monthly chart for Bank Nifty. So monthly again you will see some selling pressure from the top, although it still isn't that bad as Nifty. But yeah, still you can see that there is this upper wick demonstrating the selling pressure at these particular levels. So let's have a look at the option chain and try to understand what was the activity there. So this is the option chain for the next weekly expiry, that is 3rd of November. The expiry this time is going to be on Wednesday because Thursday is a trading holiday because of Deepavali. And let's try to analyze this option chain. So very first observation that you can see that put writers are almost missing and there is intense fear in the market looking at the fall for the last 2 weeks. Just have a look at this. The highest OI here I can see is on 17,000 I believe. Yes, it is indeed on 17,000, but just look at that. Okay, let's just have a look at the hundreds multiple. That would make things clear. Yes, so now you see that the highest OI is on 17,000, that is 22.4 lakh contracts, and that is the cumulative OI that I am talking about. And if I talk about the OI chain, so you will see that not a lot of addition has been done on the put side. Whereas just have a look at the addition on the call side. And in fact, the resistance on 17,800 is much stronger than the support on 17,000. And this clearly tells you that there is fear in the market and people are just not ready to write puts. If I talk about the PCR, this is clearly oversold. So some sort of bounce could be expected Now that could either be in the form of gap up or going flat and then gapping up. But again, people do argue that this is oversold. But let me remind you that when the market was shooting up in one straight line, we have also seen PCR of 1.8 and 1.9. That was extremely bullish as well. But again, talking about the resistance, this is clearly 18,000 is a very good resistance. You can see a cumulative Y on the call side of more than 71 lakh contracts. That is quite significant. And clearly 18,000 would be a resistance this time. So anywhere between 18,000 to 18,100, if I get Nifty, I would be tempted to short Nifty for a target of, for a bigger target basically. I would like to trail my stop loss. And the stop loss in this case would be simply 100 points, because if it goes above 18,130 once again, we can say that this was maybe a trap and market still has some steam left. But anyways, I told you that for me it's a sell on rise market, because things are looking negative, not only on charts but also based on data, which we'll have a look at soon. But this is clearly a selling zone for me. If at all I get Nifty, I am going to make an aggressive short position between 18,000 to 18,100, and my stop loss would be 18,130. So yes, this is about the option chain, clearly looking a weaker option chain. Let's have a look at the activity in the cash market from the institutions. So this is the cumulative activity for the month of October. You can see heavy selling from the institutions, particularly FIIs, have sold for more than 25,000 crores. And in the last trading session, just have a look at this figure. It's more than 5,000 crores of selling. And just have a look at this, 4 digit numbers for the last 1 week, or maybe more than. Yes, you can see that for the consecutive last 5 to 10 days, there has been some aggressive selling from the FIIs. And what are the DIIs doing? They are probably buying some good quality stocks on dips. By the way, some of the stocks are available at some good valuations in the market. If you want a video on what stocks you should invest in at this current moment and what should be your strategy if at all a correction comes in the market, do let me know in the comment section. If at all I get some good number of requests, I will consider making a video on the same. So yes, again some good amount of selling in the month of October, definitely not positive for our markets, and this is clearly hinting that maybe the FIIs are running away and booking some of their profits in the heavy investments which they have made, let's say from March 2020 onwards. So again, this looks negative because almost more than 20,000 crores of stocks have been purchased by the retail in the cash market. So clearly not a very healthy sign. Let's talk about the global cues. So global cues, again US markets closed almost close to their all-time high. All the three indices, be it Dow Jones, S&P or Nasdaq, and even European indices recovered, although these were trading in red on Friday, but they closed and they recovered quite well. Talking about the 10-year bond yield, so that has given some fall. This was above 1.6 not more than 2 days ago. But again, this has given some fall and it's currently around 1.56. Although this is still high, but it depends whether it takes support here, and if it starts going further up, then you can expect some correction in Nasdaq. Also, there is a Fed meeting on 3rd of November. So be very careful about that, because if at all there are some tapering talks discussed, this could impact the market quite negatively. So this is about it, and then let's talk about the commodities. So again, crude oil, it's quite expensive, and you can see that although it has seen some correction from 85, but still we are in the inflation category, and the inflation you can see for yourselves. The rate hikes in petrol and diesel, they are self-explanatory. So yeah, I need not talk about much here. And yes, let's have a look at the derivatives data. So in the last trading session, that is on 29th of October, you can see that in the futures, first of all, there was a gain in the net long in index futures by almost 2.11%. So some longs added after some really good profit booking for, let's say, the last 4 to 5 days or even more. You can see that there is some relief. They have added almost 9,200 longs and almost 1730 shorts. So some bullish momentum is expected. Although looking at SGX Nifty, the SGX Nifty closed somewhere around 17,815, which might be up for a gap up. So Nifty might open gap up, but again, it's no guarantee. And if at all it opens gap up, so as per me, that gap up should be sold off. But if it sustains, then do not short. But if at all I get a gap up around 17,800, I will definitely like to short if the market shows some sign of rejection from the opening. That's one thing. So yes, index futures is positive. Talking about stock futures, again the net position here is around 49%, which has reduced, which has drastically reduced. If you have a look at this, this was even higher above this. This was close to 55, and from 55 we are below 49 now. So this is again clearly negative. But again, some sort of longs have been added, some shorts have been added, but they are slightly positive. So index futures positive, stock futures positive. Let's talk about the options data. So the call longs added were quite significant, almost more than 1 lakh call longs added, but almost similar amount of call shorts have also been added. So again, this sort of nullifies. Talking about the put side, so put, you will see that around 53,000 lots of put contracts added and around 41,000 lots of put shorts added. But these put longs, net on net basis, these could be almost, this is 11,000 put longs. These could be because of this hedging this particular future position. So again, gap up should most probably be sold off, but if it doesn't, just keep a tight stop loss. We can observe that the market could open up gap up, or either that gap up could be sold off, or it could trade sideways for the rest of the day. So anyways, this is how the data from the FIIs look like. Yes, so this is our analysis for today. You can expect a sideways to a bearish market and the gap up being sold off on Monday. That's my view for the day. And I have already sold the 18,000, 18,050 and 18,100 calls. And I won't really exit because my break even is somewhere around 18,050. So again, I would not really like to exit that position, and I will keep on holding that because there are very few chances, looking at the open interest, that this weekly expiry would be above 18,000. So most probably all these premiums are going to be zero. But anyways, let's see. This is market and anything is possible. But as of now, the data is looking really negative. And even if I show you the net position from the FIIs in the options, so let me also show you that you will see that the put longs are clearly more than the call longs. So that's a sign of bearishness. And even the call shorts in the index are now more than the put shorts on a cumulative basis. So again, that is something which is not really healthy. So again, a lot depends on the Fed's meeting outcome. The US markets are already at an all-time high. And if at all something unexpected happens, then you can expect a profit booking. And our markets are already looking really weak. So yes, this is it for this video then. I hope you gained something out of this. If you appreciate the effort, please consider pressing the like button. And if you are new here and coming up for the first time, subscribe to this channel for more such content. Thank you so much for sticking around till the end. Have a good day. Take care and bye-bye.